Bitcoin, the world's first and most powerful cryptocurrency, has always been at the center of financial evolution. Since its creation in 2009, it has challenged how we view money, banking, and global transactions. As we enter 2025, one question dominates every investor's mind: will Bitcoin finally reach $100,000? This isn't just a price prediction, it's a reflection of where digital finance, blockchain technology, and global adoption are headed. Bitcoin's journey has been extraordinary, from being traded for just a few cents to surpassing $60,000 in previous bull markets. Bitcoin has transformed from an internet experiment into a global store of value. Today, institutions, governments, and retail investors treat Bitcoin as digital gold, but the real question remains: can it double, triple, or even quadruple in price this year? To answer that, we need to explore the data, the psychology of the market, and the forces driving crypto economics. One of the biggest reasons experts see potential for Bitcoin to reach $100,000 in 2025 lies in the Bitcoin halving event. Every 4 years, the Bitcoin network automatically cuts its block rewards in half, a built-in scarcity mechanism that limits supply and increases value over time. After each halving, history has shown massive price rallies. Following the 2012 halving, Bitcoin rose over 8,000%. Another driving factor is institutional adoption. The arrival of spot Bitcoin ETFs has brought billions of dollars into the market from traditional investors who were once skeptical of cryptocurrency. Institutions like BlackRock, Fidelity, and ARK Invest are now offering clients exposure to Bitcoin without the complexities of digital wallets or private keys. This mainstream validation has made Bitcoin accessible to pension funds, insurance firms, and corporate treasuries. As institutional capital continues to pour in, demand could easily outpace supply, a classic setup for a major price surge. But the bullish narrative doesn't stop there. Global Bitcoin adoption is expanding rapidly. Countries struggling with inflation or currency instability, such as Argentina, Nigeria, and Turkey, are turning to Bitcoin as a store of value and medium of exchange. In places where banks are unreliable or governments impose strict financial controls, Bitcoin provides freedom. This global use case adds a powerful layer of real-world utility to the digital asset, giving it staying power beyond speculation. Now let's discuss Bitcoin's scarcity, one of its most defining features. With a hard cap of 21 million coins, Bitcoin remains the only digital asset with a mathematically enforced limit on supply. Over 19 million Bitcoins have already been mined, and millions more are estimated to be lost forever due to forgotten keys and lost wallets. That leaves an ever-decreasing available supply, a phenomenon that economists compare to digital gold scarcity. As demand increases and supply diminishes, basic economic principles suggest that prices can only go one way up. However, no conversation about Bitcoin's future is complete without addressing the risks. Market volatility remains one of Bitcoin's biggest challenges. A sudden shift in global macroeconomics, such as rising interest rates, strong US dollar performance, or tightening monetary policies, can cause price corrections. Moreover, crypto regulations are still evolving. Governments around the world are exploring how to manage taxation, compliance, and anti-money laundering controls in the digital space. A single piece of negative regulation from a major economy could impact investor sentiment temporarily. Despite that, innovation within the Bitcoin ecosystem continues to grow. Layer 2 solutions like the Lightning Network are enhancing Bitcoin's transaction speed and scalability. These advancements make it more practical for everyday payments and microtransactions. Additionally, developments in blockchain security and self-custody wallets make Bitcoin more appealing to both beginners and large investors. Analysts use on-chain data to track Bitcoin's potential path. Metrics such as realized price, HODL waves, and stock-to-flow ratio are showing bullish patterns. The stock-to-flow model, for example, has historically predicted major bull runs following each halving, pointing toward six-figure price targets. According to several on-chain and analytics platforms, Bitcoin's fair value in this cycle could easily surpass $150,000. Let's not ignore the psychological aspect, the fear of missing out FOMO. Each time Bitcoin breaks a new record, new investors flood in, amplifying demand. If Bitcoin were to cross $100,000, the excitement could ignite a massive wave of retail participation. When combined with institutional interest and limited supply, this could drive parabolic movement, similar to what we witnessed in 2017 and 2021. Still, skeptics argue that Bitcoin's path to $200,000 will require extraordinary circumstances, perhaps a global financial reset, hyperinflation, or mass migration of capital away from traditional assets. But such events are not impossible. With global debt at record highs and fiat currencies facing inflationary pressure, many investors are already seeking safe havens. Bitcoin's decentralized nature and borderless liquidity make it an attractive hedge against uncertainty. In addition, the influence of technology and public perception continues to shape Bitcoin's trajectory. Younger generations, especially millennials and Gen Z, trust digital assets more than traditional finance. Surveys show that a growing percentage of investors under 40 prefer to hold crypto rather than stocks or real estate. As this demographic's purchasing power expands, so will their impact on the Bitcoin market. Moreover, Bitcoin's integration with Web3, DeFi, and tokenized assets creates even more reasons for its long-term demand. Developers are building applications that use Bitcoin as collateral for loans, as a means of settlement, or as part of decentralized exchanges. This bridges the gap between traditional finance and the decentralized economy, expanding Bitcoin's utility beyond just digital gold. Beyond speculation, one of the strongest cases for Bitcoin's long-term success lies in global economic uncertainty. As inflation continues to devalue traditional currencies, more investors are turning toward assets that maintain purchasing power over time. Bitcoin, with its predictable supply and decentralized nature, provides a transparent alternative to fiat money systems controlled by central banks. This shift in mindset, from dependence on traditional monetary systems to self-sovereign wealth, could fuel a new wave of adoption that drives Bitcoin to unprecedented heights. Another crucial factor is the increasing role of artificial intelligence and automation in financial trading. As AI-driven trading algorithms become more sophisticated, they are identifying Bitcoin as a high-performance asset during market upswings. These bots automatically rebalance portfolios to include more Bitcoin exposure, magnifying its demand in digital markets. Combined with growing institutional confidence, this technological trend could help Bitcoin sustain higher price levels more efficiently than in previous cycles. We must also consider the role of emerging markets. In 2025, countries like India, Brazil, and Indonesia are witnessing surging crypto adoption rates. Millions of new users are joining digital exchanges and mobile crypto wallets every month, largely due to better internet access and fintech innovation. As these regions embrace financial decentralization, Bitcoin stands as the gateway asset, a digital tool that allows people to transact, save, and invest without relying on unstable local currencies. Lastly, Bitcoin's cultural shift is undeniable. It has evolved from a niche technology for programmers to a mainstream symbol of financial independence. Celebrities, athletes, and even national governments now endorse Bitcoin. El Salvador continues to prove that Bitcoin can function at a national level, and other countries are watching closely. As cultural acceptance deepens, social trust in digital currency grows, and with trust comes value. Bitcoin's future is not just about numbers, it's about the evolution of trust, technology, and freedom. Whether it hits $200,000 or not, one thing is certain: Bitcoin continues to shape the future of global finance. If you found this breakdown helpful and want to stay ahead of every major move in crypto, make sure to like this video, subscribe, and turn on notifications, because the next wave of innovation is already here, and you don't want to miss it.